Friends, good morning. On behalf of Banking Quest, I, Tilak Gulati, extend you warm welcome. Friends, Banking Quest has been envisioned by senior level bankers with the sole aim of developing next generation bankers. We have been achieving this objective by updating the knowledge of bankers through our illustrative website, analytical blogs, webinars, workshops, articles published in leading financial dailies, and also through our YouTube channel. Friends, I am happy to announce that so far we have trained more than 5,000 bankers. Friends, during the last few months, we have conducted a host of training programs. To name a few, we have conducted pre-promotion to officers of State Bank of India, Union Bank of India, Punjab National Bank, Indian Bank, Bank of India, and various private banks, regional rural banks, payments banks, small finance banks, and cooperative banks. Friends, we have also conducted workshops for Bank of Maharashtra. Presently, friends, we are conducting foreign exchange training program with interbank participation, and also we are conducting credit management training program with interbank participation. The list of all our training programs, past programs, as well as the present and the future programs can be viewed from our website and in the events column. You can see over there whatever previous training programs and events we had already conducted and what we are going to conduct. So friends, from our website bankingquest.com, you can read a lot of blogs which gives a critical analysis of the latest topics relating to banking and finance. Friends, here you will get a lot of tutorials which are relevant for the bankers for updating their knowledge. Tutorials are there on foreign exchange. Tutorials are there on credit. Tutorials are there for general banking, friends. Just to give you a glimpse of our website. Friends, registration on our website is totally free. Just you get yourself registered on our website and take advantages of our webinars, our trainings, our blogs, and also our tutorials. Friends, for achieving this objective, we have been getting the support of our core team. Our core team, with their passion, perseverance, and hard work, they have been able to achieve this objective. To introduce you with our core team, I am Tilak Gulati. I am presently Chief Executive of Banking Quest, and I am the former Principal Staff Training Center of UCO Bank. And in our core team, we have Professor Rajiv Kishore Dubey, former Chairman cum Managing Director of Canara Bank, Mr. Hargovind Sachdev, former General Manager, State Bank of India, and also the head of the Central European Credit Desk of SBI Frankfurt, Germany. Mr. Sanjay Khuri, former General Manager, State Bank of India, Mr. Rajesh Mahajan, former General Manager, Bank of Baroda, Mr. Vaman Gokhale, former Deputy General Manager, Central Bank of India, Ma'am Surendrajit Kaur, former Assistant General Manager and Faculty, State Bank of India, Mr. Alok Kulshestra, former Executive, Punjab National Bank. Friends, besides, we have been patronized and getting faculty support from dignitaries who have achieved excellence in the field of area of strength in the field of banking and finance. Friends, every Sunday we conduct webinars relating to topics on banking and finance. Today, our topic of webinar is Decoding Financial Statements. And I have pleasure that we have with us Mr. Hargovind Sachdev. I welcome you, Mr. Hargovind Sachdev, sir. So, friends, to introduce Mr. Hargovind Sachdev has over 39 years of banking experience, having occupied senior position in UCO Bank, United Bank of India, State Bank of Patiala, State Bank of Travancore, and State Bank of India, where he headed the Central European Credit Desk at Frankfurt, Germany from 2006 to 2011, covering 15 countries of Central Europe. Mr. Sachdev has undergone international banking training from Asian Institute of Management, Manila, Philippines, in the year 2003 and a multi-currency lending technique training at Euro Money Institute, London in 2009. Mr. Hargovind Sachdev has specialization in credit, foreign exchange, vigilance, monitoring, and appraisal of corporate loans, MSME credit, gold loan, agriculture loan, and NRI business management in assets and liabilities. As a forensic auditor, he has conducted various transaction audit allotted by banks. Mr. Sachdev was facilitated by Central Vigilance Commissioner Shri C.V. Chaudhary for winning first prize for best article on preventive vigilance in 2015. He is also an accomplished public speaker, having conducted multiple motivational seminars for institutions like ONGC, National Housing Bank, and Bank of Baroda. Mr. Hargovind Sachdev is an independent director and consultant to various big entities in the corporate sector at present. So I welcome you, Mr. Hargovind Sachdev, sir. So friends, you have been waiting to listen to Mr. Hargovind Sachdev. So I request Mr. Hargovind Sachdev to kindly start his deliberations on decoding financial statement.
Worthy colleagues, तालीम नहीं दी जाती परिंदों को उड़ानों की, तालीम नहीं दी जाती परिंदों को उड़ानों की, वो तो खुद ही समझ लेते हैं ऊंचाई आसमानों की. No bird is ever taught how to fly, but they simply throw themselves in the air, find their wings, strengthen them, and then keep flying. Bankers are also such accomplished birds who have kept the nation's flag flying. We have seen how in this COVID, they have taken the position of inland soldiers and protecting the frontiers of banking. I am extremely honored to be with each one of you. Kindly accept my best respects to each one of you from Banking Quest. The very fact that most of you have qualified the probationary examination of various banks, wherein more than 5 lakh applicants, compete for a few hundred positions, shows the mental makeup, the mental strength and knowledge, and the versatility of each one of you. I'm sure in the next 45 to 50 minutes, each one of you will assimilate my little experience in decoding the balance sheet, which is one of the most important weapon to save or destroy a banker in present day life. Friends, if you see the hierarchy of the present day banks across India, you will find that those who have good credit knowledge are occupying the highest positions in all banks. More than 80% of the people who have done good in credit are today chairmen and MDs of banks. And out of those 80%, 90% have mastered the art of decoding the balance sheet. That is why they could take good decisions and avoid bad decisions and protected their careers, and today they are at the top of the banking industry. I also wish that you kindly inculcate the smaller points which I am going to submit to you today and become a winner banker. Friends, before I come to Indian scenario, let me just take you briefly to what the European scenario and German scenario especially has to offer as far as the importance of this important financial statement is concerned in a banker's life. See, the equivalent of SLBC in India, in Germany is called as Customer Service Committee. They have created a sort of mandate and protection guideline for both consumers of banking services and bankers. We find that they have implemented what is called as a 3-visit policy. Now, this statement finds due diligence in the second visit. Let me come to the first visit. By seeing the site of a bank or by reading from newspapers that banks have launched certain products, the customer steps into the bank and then gives his credentials, his KYC, his application for loan, his balance sheet, and various other financial statements and details of securities. He is asked to come for second visit in a week's time. By that time, the bankers in Germany, they go to the various public domains and try to find out the credibility of this particular borrower. They analyze his balance sheets and various statements and do a risk analysis. By the time he comes back, they discuss at length that the pricing would be higher because the risk perception is high. Maybe the repayment of loan will be shorter because his cash flows, they are throwing a lot of cash, or maybe he'll have to enhance credit enhancement by giving additional security because his business is a bit risky. With all these conditionalities put before the customer, he is asked to say yes or no. Once he says yes, on the third visit, he is asked to sign the loan documentation and loan is disbursed. But the important thing is that on third visit, if the banker does not release the loan, the local German Reserve Bank of India equivalent called as Bundesbank gives the prerogative to the customer to issue a check, and that check will have to be honored by the bank. And in case a check issued under these circumstances after creating security online by the customer is dishonored, then huge penalties are imposed on respective banks by the Bundesbank. And part of those penalties, suppose 5,000 euros is the penalty imposed on a bank, then at least 500 euros have to be debited to the account of the particular officer who has misbehaved like this with customer in dispensing credit. Friends, credit is the only product which we deal in. It may be of various shapes. It may be a letter of credit, a cash credit, a housing loan, a car loan. But being a single product, the best thing to analyze before disbursing that product is financial statements. Now I proceed to decoding of financial statements. I know you have a slight background of how European banks work and how we work. And then you will be able to now disseminate why the maximum NPAs in European financial institutions have not even crossed 2%, whereas some of our banks have NPAs which are more than 25%. Friends, before we find out what the balance sheet shows, we'll have to find out what the balance sheet hides. See, the balance sheet can give you very glossy pictures, very cosmetic pictures about the client, but the things it hides are very, very important. Today, you can download the balance sheet of any company from the Government of India site or from his site, but it will be all cosmetic. You will not know the reputation of the company. You will not know how the directors have interacted with public, how they have dealt with the suppliers, how they have dealt with their loans, whether they have completed and accomplished the targets which they had committed to their lenders. You will not know. Similarly, you will also not know who are the people, who are the real strength of this company, what is their integrity, what is their truthfulness. Now, to find out these things, just carry that balance sheet to the premises of the borrower before you seriously start analyzing the balance sheet. Now, from the CIBIL, you would already find out whether the particular promoters or particular company is defaulted, has not serviced its interest or installments. If they are on the wrong side of CIBIL, please do not go for inspection of the unit. Simply say no. Or if you find that the CIBIL is okay, but you have to visit the business site or the factory. I just recollect briefly what happened when I went to inspect a unit when I was Deputy General Manager Credit of the bank. There, I entered the premises via the security guard room. And I found that there was a single guard looking very tired, very stretched. I asked him how many guards are there. He said, sir, we are only two guards. One works for 12 hours in the day and the other in the night. But unfortunately, sir, the owner asked us to sign on 4 places. That is, he's asking us to sign on 4 revenue stamps because probably he's paying to 4 guards, but actually we are only 2 guards. So I immediately found out that the owner is playing with the wages of security guards, and by debiting 4 wages in his balance sheet, he is actually paying 2. I entered inside and found that the person who had brought me was telling that there are 55 workers, but I could hardly count them, and I found that there were only 29 of them. There also, I immediately asked him why there is so much of absenteeism. He said, no, sir, there are festivals and there are marriages and all that. As such, a lot of people have gone out and they are on leave. So I again checked up from the payroll and found out that the owner was siphoning off the salary, the funds through his balance sheet and P&L by showing more people under employment. Then I further proceeded. A rickshaw was coming with some scrap on it. I asked him, what are you carrying in this rickshaw? This fellow got scared. He ran inside and called one of the factory persons. They came and they said, sir, it is a scrap. Whatever scrap is generated during the previous day, next day morning, we are sending it out and selling to a kabadi. I said, fine, but just remove these bags from the rickshaw. To my horror and surprise, I found 2 bags of fresh raw material below that scrap. Then when I checked up from the gate again, I found out there were never any entries for sending out the fresh raw material. I asked the person very, very strongly, and he said, sir, daily our promoter is asking us to send back 2 fresh bags of raw material, and then next day they come back as fresh supplies. So I found out that the balance sheet which he was showing as purchases was also cooked up. I further went and counted the number of machines. There were about 12 lathes as per the balance sheet. I could not count more than 9. Then I was told that 3 of them are installed in a relative's factory, although shown in this balance sheet. I came very dispirited to the accounts department. There a person was signing a check. I just took the checkbook from him and asked him, sir, show me the check. He showed me the bill and the check. It was check for about 12,59,000. I said, sir, what is this? He says it is towards supplies. Then I again checked up the inward register at the security guard room and found that there was never any supplies received from that particular company. Deeper analysis revealed that those were fictitious supplies. Whenever good payment was received, this owner of the factory in his balance sheet was showing this party as a sundry creditor and was paying him and encashing this check through another account and bringing back that cash into the business or diverting it to his personal assets. Now, lastly, when I was so dispirited while learning about the people of the company, I came to the exit gate where a small truck was getting loaded. I said, where is the invoice? Where is the challan? Where is the GST format wherein you are filling up that these goods are going outside? So he said, nahi sir, ye hamara saman cash mein jata hai. हमारे ब्रदर इन लॉ की एक कंपनी है, उसमें हम लोग ये कैश में बेचते हैं. तो फ्रेंड्स, these are the things which are happening. So when you sit down to decode a balance sheet, you please be very, very vigilant and keep these things in mind, that these days the businessman is failing because of his greed, and in this process he's failing his bankers also. Friends, a good balance sheet, on the other hand, which will be very glossy, very cosmetic, very nicely presented, also does not ensure that the borrower will be good. We have seen that Satyam Computers, was given the best corporate practices award the year when the fraud was found out, wherein he was cooking up all the figures in the balance sheet. Even the level of fixed deposit receipts with banks he was cooking up, which is such a easily ascertainable fact. He was, sort of defrauding. Now, the balance sheet can show you the past of the company through figures and numbers. It can also show you the present of the company. But one thing which the balance sheet doesn't show is actually the future of the company. To discern the future on which you have to take the loan decision, you have to have a long-term view of that particular business which he wants us to finance. You have to do a detailed SWOT analysis. You know what is SWOT? SWOT analysis has to be done. Strength, weaknesses, opportunities, and threats have to be seen in that industry scenario. And you have to then compare his performance with peer level. Now, this is part of real assimilation and decoding of balance sheet. If you do not take these steps and simply work out some ratios and put up a proposal, probably you will be harming your career as well as the valuable depositors' money which is lying in your bank. Friends, now coming back to the basics of balance sheet, let's begin with small basics. It's a financial statement everybody knows. It shows in detail what a company owns, the assets, then what a company owes, its liability to unsecured creditors, to secured creditors, to the promoters. And it clearly shows you the amount invested by shareholders in the business, the skin of those. Now, assets are on one side, liabilities are on one side, and the balance sheet always tell you. This is very basic information. Some of the managers, some of the people who put up proposals are erring on this aspect also. They've seen that balance sheets are normally not even balanced. Some of the items are missing. Friends, we have to understand various parts of a balance sheet. Normally, we find that people will say, it's a 3-part instrument. No, it is actually a 4-part document. Number one is the balance sheet itself. The second is the P&L statement, that is the profit and loss statement. The third is the cash flow statement. And finally, the most important thing which a balance sheet should have is the audit report. Now, why the audit report should be there? There is a strong reason. See, a auditor, is privy to so many laws of the land, which as a banker, you are not aware. So, in his audit report, he will tell whether the company is compliant on company's law, whether the company is compliant on income tax law. It will also tell you whether he is doing CSR activities as per the recent directives of the government. He will also tell you that who are the promoters who are in defaulters list. He will also tell you whether the business is an ongoing concern or it is coming to an end or it has already come to an end. And finally, the most important thing which bankers must see in the audit report is what does he say about the status of his accounts with banks. And an auditor is always expected to clearly articulate that the account is a standard asset or a substandard asset. So there is a tool. Before you enter a balance sheet, there is a big, beautiful tool called like the auditor's report, which you must open. First, do these studies, find out various compliances he has done. If you are satisfied, put your hand to your heart and then you say, okay, I am going to analyze further. Otherwise, if there is no audit report accompanying the balance sheet, if audit report is not fully, disclosing the facts, or if it is a qualified one, or it carries various strictures about the promoters, do not open the balance sheet further. Simply say no, I will not do. Friends, balance sheet in itself is a very helpful tool, but then what it can give you? You can only work out certain ratios by looking into the balance sheet. You can see the size of his sales, the size of purchases, the profit levels. But in effect, it is just a tool to enable you to find out various ratios which the company has accomplished through its performance. Now, those ratios are not just for record. They have to be compared with the benchmark ratios of Reserve Bank of India, of your own bank, or if it is a consortium advance or a multiple lending, then you have to also see whether the ratios are in compliant with the entire group of lenders. Now, those ratios, if there are delinquencies in those ratios, there is a provision for give some benefit of doubt. But if most of the ratios are below the benchmark level, again, do not open the balance sheet. Just reject the proposal. We have been accommodating borrowers and have built up huge NPAs, which are now more than 10 lakh crore, which is 5 times the level of 5 or 6 small banks in India. Friends, we have to be very, very watchful. And then when he gives you an application for finance, you see whether his projected financials are in consonance with his past growth. Normally, a business should double itself in 5 years by a growth of 20% per year. That is the normal growth. If a borrower is giving you very rosy pictures, then please accept them with a pinch of salt. As I said, if there is no audit report, if the audit report is not clean, if it is a qualified report or it carries a disclaimer, reject it. What is a disclaimer? Disclaimer is that most of these data which this fellow has furnished in the balance sheet is not coming out of the books of the accounts. It is simply cooked up in the computer and a balance sheet has been made. If a disclaimer is there, then the balance sheet has not to be touched with a barge of pole. You have to simply reject it, because this is going to be a big NPA problem for years to come for the institutions. Now, having accepted that the fellow's integrity is high, he has good people, he is not defaulted under CIBIL, you start analyzing. And then the first thing in the balance sheet, you have to see the liability side. Friends, the liability shows what exactly is the pressure on the borrower to come to you and to borrow. Whether it is a genuine advancement aspiration or it is just to ward off the pressing creditors he has come to you for. So, first thing you have to do is analyze the skin of the promoters into the business. Find out their net worth. If there is a good net worth, that means the owner has been bringing in a lot of cash. He has great confidence in this business and he wants to take it further for the prosperity of his people, himself, his labor, and his stakeholders like banks and suppliers. Now, you have to analyze how much capital is invested. Is it adequate to match the borrowings? Now, you have ratios here. If he is having a capital of say 1 crore and he is asking for a loan for 20 crores, it is totally mismatched. He cannot service his stake, his skin in the business is very little. You have to avoid such a borrower. Now, you have to also disseminate what are the reserves. Whether reserves have been growing over the years or he is eating out his reserves. If the reserves are growing over a year, that means he again has good confidence. He leaving his profit into the business for development of business and keeping the borrowings low. So if the reserves have revaluation reserve within it, some assets were revalued because of Ind AS or various other compliances enforced by the government of India or the local society or the local chapters, then, those reserves, have to be analyzed whether those reserves have brought in any cash or they are, cash neutral. So revaluation reserves and all that should not, mislead you to show you that he has got a high net worth. You have to exclude them while working the tangible net worth of the company. Similarly, whether he has withdrawn the capital during the year. Why he is withdrawn? When he's coming to you for helping in building up his capital, his working funds. Why he is withdrawn the capital? You have to analyze that. You have also to see whether he has disclosed and or declared a disproportionate dividend. I find a lot of Gurgaon multinational companies where 100 crore was brought in from abroad and the company is in losses, but still they are declaring a dividend of 1000%. And within 1 or 2 years, that 100 crore brought in from abroad is sent back, and the lenders, the suppliers, and various stakeholders in India are left high and dry, and they just go on chasing this fellow for recovering their NPA. So you have to see whether heavy dividend is being given, and then the most important thing is whether the shareholding of that promoter has been pledged to a bank to raise loan. That is a very, very difficult sign. Sometimes some borrowers are pledging that security as a security for a loan to their associate company. So if pledging of share has been endeavored, please avoid such company. And if at all he convinces you that these shares were pledged to bring in liquidity into the company, then see what is the rate of interest he is paying, whether that money which was given by the bank which has financed his shares has come back into the cash credit account or not. If you don't see that, you will be taken for a ride and end up with an NPA. Friends, further, you have to see what is the level of unsecured loans. Now, unsecured loans, if they are carrying very high rate of interest, maybe more than the rate of interest of bank, then you have to be very cautious about them. Whether the unsecured loans are genuine or whether it's just a round tripping of funds, brought in to just enhance the, quasi equity of the firm to befool banks, saying that the net worth is pretty good to sustain the high level of borrowings. You have to call for the agreement entered with the unsecured lender and see what is the maturity period of the loan, whether the maturity period of the loan is small or large. If it is small and then he withdraws moment you give him loan and he repays the unsecured, then he will not have liquidity and the purpose of financing will be defeated. So be very cautious on the unsecured loan side in the liability side. Well, friends, if he is having loans from other banks also, you have to call for all sanction letters. Then you have to call for the statement of account. You have to see how many times this account has become SMA 0, SMA 1 or 3 or 2 during the currency of this last year. If you find that even once it has become, I think you should look for another account. Why should you bother about taking a risk which may not only make a loss for the bank but loss to your career? Now you also have to find out how many checks have bounced. You can always find it out from the statement of account how many checks have bounced, and you can also find out how this NACH authorizations given have been honored or not. From the audit report, as I said, you have to again check whether the account is a standard asset or an NPA. Now, what is the source of unsecured loans you have seen? You have also seen the loan outstanding. Now, any balance sheet will show you, long-term liabilities and short-term liabilities, which are normally called as current liabilities. Now, within that current liability, you will find a head called Sundry Creditors. It is the enumeration of the amount payable to suppliers on day-to-day basis. You have to dissect the Sundry Creditors, whether these are related parties. Most of the companies, will show their brother-in-law or their relatives as Sundry Creditors. And moment a money comes, fund come, they will give him a check. And then from him, they'll take back cash or reroute it, and then they will show it as a capital enhancement or an unsecured loan. So if there is a related party there, whether it is very big outstanding or a small, you have to analyze whether those Sundry Creditors are pertaining to business. Now he is doing manufacturing of cardboard boxes, and Sundry Creditors are towards car supplier or towards pharmaceutical suppliers. You have to just disseminate whether those Sundry Creditors pertain to the business or his other liabilities. He is just parked here to befool the lenders. You have also to see whether the level of Sundry Creditors is higher than the stocks he is carrying. Suppose he is carrying higher Sundry Creditors and the stock position is very thin, then that means there is no paid stock. And what will be your primary security? So in such a situation, he will come to you, he will say, sir, मेरा receivables बहुत बड़ा है, में जो Sundry debtors है वो भी तो है, लेकिन नहीं. You have to see that he has adequate skin in the business. The current asset level should normally be higher than Sundry creditors level. Now, this fellow must be indebted with other banks. If not in the firm, he would have borrowed a car loan, he would have borrowed a share loan, he borrowed a housing loan. You have to ask for their statements also. Don't spare him, because it is a question of your life, your future. So you ask him, bring those statements. Only if those accounts are standard, go to the balance sheet deeply. Otherwise, simply say a polite no and say we will remain friends, but we cannot enter into a relationship of borrower and lender. Now, you also have to analyze the statements of accounts, where how much cash he is depositing. What is the generation of cash? That means, as I told you, some of these stocks are sold on cash, and they generate parallel economy, do more harm than good to all of us. So if he is depositing heavy cash into his accounts repeatedly, then also you have to see, and you see that the bells are ringing in your ears, and you have to avoid such customers. Of course, return checks, you can always cross check with the amount debited for return check service charges. Now, once you have analyzed this balance sheet in terms of short-term liabilities and long-term liabilities, kindly come to dissecting of the asset sides. Now you have to see whether the current assets are more than current liabilities. If there are not, then the current ratio will be negative, showing again that there is no neck of the promoter in the business. Now, fixed assets, they play a large role when we do forensic audits in disclosing the integrity of the borrower. You'll find fixed assets like huge cars, Mercedes and all BMWs, whether the turnover warrants that, whether the company requires such ostentatious assets is not shown. So then you will also find that the balance sheet is showing one figure and the fixed asset register does not have entries of those figures. There is no proper depreciation. Now, what is depreciation? You see, each fixed asset, has a life. Like human beings, the assets also live a life of say 5 years. Every year, the lifespan goes down because of the wear and tear of a machine. So we have to substitute that machine after a few years. In order to create buffer for substituting the machine, we have to create a fund which is called as depreciation. It is a non-cash entry, but we go on depreciating the article as per the standards provided by the government. And then that money is accumulated to substitute this asset, whether he is providing genuine depreciation. Most of the companies are not doing it because otherwise they will not be able to show high profits. So you have to see whether he is providing proper depreciation. Then these assets, whether as I submitted, are useful for the assembly line or they are just, for some future expansion which is not relevant to the time, wherein he should not have invested money. Then, of course, you have to always ensure whether these assets are properly insured or not. Now, as I submitted, the stocks should always be more than Sundry Creditors in normal circumstances. If the stocks are scattered on various sites, suppose he says, I have got stocks in Bahraich, in Delhi and in Meerut. No, then, you have to immediately suspect, because his friends or his brother-in-law's firm in Bahraich or Meerut will be showing, as the stocks of this company. So this thing has to be extremely, carefully analyzed whether these stocks belong to him. How do you verify it? You have to see the stock statement he has prepared. You have to also see the insurance policies, wherein whether he has taken a cover on Bahrain strike and stocks and Meerut stocks along with the stocks of Delhi. If he has not done, then certainly these stocks have to be removed and real current ratio has to be worked out. Then whether these stocks, are obsolete, you just see the movement of stocks for 1 year, 2 years, he has not utilized those stocks and they are just lying, or they are rejects of some supply order and he just goes on taking drawing power against that. That also weakens your primary security and puts you in great stress in the future. So, and another thing is whether the non-current assets are high. If the non-current assets which have no relevance to the day-to-day operation of the business, if they are also very high, then that also shows a lot of obsolescence in business and is a cause of worry because a lot of money is blocked in that and liquidity is under strain. Now we come to receivables. Friends, this is where a lot of frauds are happening and this is where you have to decode your best when you analyze the receivables. Now you have to first go the receivables age-wise. Normally, a business cycle should recover its receivable in 90 days. But then if the receivables are 180 days, 9 months and 1 year and beyond, then they are not receivables. What Aristotle said, he said that if the money does not come back in a given time which is acceptable all across, then this money will never come back. Friends, if the receivables are prolonged, elongated, stretched, they are not receivables. That's a bad debt. That will never come back. You should not give drawing power against those receivables. Then whether these receivables are genuine, most of the game is here. The parties will take drawing power against receivable, but those receivables will not be genuine. They will be just fictitious names that I have to pay to this, I have supplied to this, I have to receive money from this. And then, ultimately when you send a letter to that party, he'll say, I have never interacted with this company. Most of the addresses of receivables given to you will be false. The letters will come back. Nobody will confirm that he owes so much of money to this particular party as a part of receivable due. So you have to see whether these are genuine, whether they are on related parties, and whether these are more than 3 months old, and whether they are on, concentrated on 1 or 2 parties. That is also very important. If that counterparty, has some problem in business, then the receivable position will, sink in this company also. So they should not be concentrated on very few parties. They should be well spread so that if one doesn't pay, the other pays and the cycle goes on. But if it is the counterparty is very strong, it is a Tata or a Birla or a Reliance, then of course, and he is an exclusive supplier to them or a manufacturer to them, then of course you can analyze them. But normally the receivable should be well scattered. Then another thing which you see, there are a lot of NBFCs who market this LC bill discounting business. Now these guys, having borrowed from everyone, having charged their current assets and receivables to the banks, will suddenly go and discount a bill and get the money and route it through some account. No, this is not permitted. But somehow if he takes permission for discounting, because the discounting rate is low, and the buyer's banker or buyer insists that this fellow can take such a factoring facility from us, then you see that the proceeds of discounting are routed through your account or not. If he's not routing those proceeds of bill discounting through your account, again there is a cause of concern because the money is getting diverted. All the working capital is employed borrowing from you. Once it fructifies into a receivable and gets diverted, then the very purpose of progress of business and repayment of installment and interest comes under pressure. Friends, now I come to another very important aspect wherein I'll delve what is happening in Europe and what is happening in India in this. Now this is the most neglected part of the balance sheet. But as per me, it's equally important, if not most important. Now it is a deliberation on intangible assets. Friends, now every European company is proud of its innovations. They go on inventing things. We have just seen in this pandemic that how some of the big names, 6 or 7 names, are manufacturing vaccines. We are just getting a license in Pune and just replicating their discovered model and bottling it and selling it across India to save precious lives. But foreign companies do innovation. They invest a lot of money. They borrow money and they invest a lot of money in research and developing new products. So intangible portion in foreign balance sheets is as high as fixed assets. Maybe sometimes much higher than fixed assets, because they are going on investing money in innovating, bringing licenses, trademarks, which they sell worldwide and earn money. So the intangible asset, whether it has been properly depreciated, see, every company will have a good software, which would have cost them lakhs. Now the software also will become obsolete in few years. So whether every year he's providing proper depreciation for the software and debiting P&L and creating a reserve to substitute the software, or he will come to you for borrowing once his software becomes obsolete. No, he should provide proper depreciation. So you have to see whether for copyrights, licenses, and intellectual property, etc., he is properly making amortization, write-off over a period of time, and creating a buffer reserve. So these are the various important points regarding the analysis of balance sheet, friends. We'll just take a small diversion with your permission. Friends, what happened when the country became independent? The Mother India's, the brightest son, the father of nation, Mahatma Gandhi, used to take lectures at the Birla House in Delhi in the evenings. And he used to also take questions from various correspondents worldwide. One day, one British journalist came to him and asked him, "Sir, your population is around 38-40 crores. At the time of independence, we were only that much strong population-wise. So, and I find that there are hardly 10 crore people who are literate, and majority, 75% of the population is illiterate. They do not know anything about what is happening in world. They can't even write their name in their vernacular. How will you do? How will you manage this country? How will you educate these guys?" he asked. And Mahatma, in his own inimitable style and cool countenance, said, "I will do it by practicing each one, teach one." Thereby implying that a literate person of 10 crore Indians shall teach the other 10 crores. And within some time, those 10 will become 20, and then 20 will teach the remaining 20, and the entire nation will become an educated. Friends, that vision of Mahatma Gandhi is now more or less coming true. We would not have accomplished 100% literacy, but we are on the right path. Today, more than 2.5 crore Indians are ruling various top companies worldwide. And that is all the result of the education which each one of you as parent has given to your child, or as brother and sister have sacrificed your interest and spent on his education and sent him abroad. Friends, Banking Quest here requests you that whatever knowledge you gain about analysis of balance sheet, kindly do share with your branch, because once they know, they will recommend it properly to you, and then you will sanction properly. Once that sort of flow develops, the NPAs which are really bothering and affecting our banking system will evaporate. So please, each one teach one. We come back to disseminating of P&L statement, friends. P&L, or profit and loss statement, is a summary of the turnover accomplished during the year and the gross profit made out of it, the taxes provided for it, the depreciation and reserves culled out of it, and then whatever is left shown as a net profit. Friends, so this statement looks pretty simple. It's a one-pager. But this is where you have to apply the best of your brains, because this is where the game is. Now, the revenue side, the sales side, you have to dissect first. Whether those sales are on single party, whether those are sales on related party, whether the sale is out of one-time big order. These are the points which you have to disseminate by talking to the finance head. Because this is where the game is. He just got one order in 1 year and he says my turnover is 5 crores because that order was over 3.5 crores. Or he just draws invoices on his related party and shows some sales which are not there. Or, he will be showing, some sale of fixed assets as part of the, revenue. No, such things have to be deeply analyzed to find out his real top line, whether he's really able to sell his product which he is manufacturing. Then the sales are either out of manufacturing or trading. He has taken a loan from you for manufacturing on a subsidized MSME rate, and then he indulges in trading where you have different benchmarks, parameters, TOL, TNW, current ratios, and he just messes the entire business by showing manufacturing and trading sale together without showing it separately, and then making a attractive top line based on which you finance certain multiples of that. So that also has to be seen. Now, the best thing which you must remember, and most of the bank managers are doing error, is that the sales shown as top line should be exclusive of GST. Now, most of these guys, they'll bring balance sheet where the GST, that is, 5%, 12%, 18 or 28% will be added. And you will not know what is the actual sale, because these taxes have not to give him any benefit. They will just go to the department. He has to deposit them with the GST authorities, and why he's showing that as part of sales. So you have to immediately ask him whether these sales which he has shown are reflecting GST also. So you have to immediately exclude to work out your ratios as far as sales is concerned. Similarly, whether these sales have come up because of the cost of raw material going up. Now you see, in last 6 months, the petroleum prices have gone up from rupees 75 a liter to rupees 100 a liter petrol. Now, naturally, all those companies which are manufacturing products using oil or its associate products as their raw material, which most of them are doing, naturally they have to pass on this enhanced cost. So their sales will go up by that percentage which is going up in procuring the raw material, especially of the oil products. So the sales will be high. But don't be, mesmerized by such hike, because this sale is only because of the increase in the price of the oil, the raw material. So you have to always analyze how this 20% or 25% growth in sales has come. Similarly, you have to compare the sales and sales projections of this particular party with the sales of similar peer level companies in the industry. You will have a file in your bank. You can ask, dial up, other branch manager, sir, you had this account. Can you kindly just see what is the growth in their sale? If you do such due diligence, you will end up taking a decision which will enhance your reputation with credit analysts and put you in line for further credit growth. Friends, let me now rush into the analysis of expenses. Now, while analyzing the expenses in the P&L, you find out whether these are essential expenses. I told you, a promoter will throw a party of 100 people for the birthday of his son in a 5-star hotel, end up paying a bill of 15 lakhs, and then he'll come next day morning and simply debit to the company's account. Now, such expenses, you can't see 100% expenses. You ask for, say, the expense list and just tick 20 of them. 5 of them the smallest expenses and 15 of them the biggest expenses. Ask for their vouchers or details. You will find out what type of person he is, what type of expenses he is booking in the name of expenses for the running of the factory. Another thing you have to see is whether he is giving huge discount to certain parties. These discounts are taken back in the shape of cash, and they are debited to again P&L to show higher expenses. You have to see that discount levels are also genuine and within limits. Then you have to also analyze whether the legal cost has gone up over the year. Last year he had paid 75,000 rupees maybe for valuation of his property or some small litigation. This year the expenses have become 25 lakhs on legal charges. That means the company is under some dispute with somebody who is chasing them or trying to settle some scores with them, and he's spending huge expenses. So friends, you have to also see that legal expenses should not go up disproportionately. If they have gone up, be very watchful. Again, if the audit fee paid is again disproportionate, normally auditors will take 1 or 2 lakhs, maximum 3 lakhs for auditing the accounts, but he is paying 10 lakh rupees in auditor. That means he's obliging the auditor to give a report which is not actual, and ignore various qualifications on the report. So audit fees should also be proportionate. Similarly, whether he has provided properly the depreciation on the fixed asset, amortization on the intangible assets, and whether he has provided the taxes which he has to pay as per the laws of the land. This is very important analysis of expenses, friends. Now we come back to the component of income, friends. Whether the profit is again out of the genuine core activity or sale of assets. Sometimes he'll sell some land, some parking space will come under metro. They'll pay him 5 crore rupees. He will show that profit is there. No, that is not the profit of the company. That is the sale of asset. Such profit has to be removed. Similarly, you have to deeply dissect the other income head. The other income will have interest earned, dividend earned, insurance claims received because of some fire, theft of some particular article of the company, recovery of old debts, some disputed debts were there for years, then suddenly somebody pays back, and some other non-core activities. If they are there and these incomes are there, and because of these incomes he makes a profit, that means he is making a loss. The profit should come from the core activity, friends. It should not emanate from other income. So first thing you should see is other income, and then cross check whether the net profit is, gross profit is below other income. You have to always see that. In export units, you will sometimes find the operations may be, slightly lost, but other income. Now in export, other income is incentives given by the government of India, duty drawbacks and all that. Those are about 5 to 6%. Now in export business, since the quality and the competition expectations are very high, so sometimes the operations may be under pressure, but the money is made in terms of incentives. So in exporters' balance sheet, you may find other income to be on the higher side, but you have to analyze the components of other income before taking a credit call. Similarly, the EBITDA margins, earning before interest, taxes, depreciation and amortization. You have to analyze whether the EBITDA margins are same as the EBITDA margins of similar companies obtaining in the similar business. That gives you a lot of sort of comfort that the company is in consonance with the business practices obtained in the countries at the present. Now, friends, why cash flow analysis is necessary? Cash flow actually is a sort of a combined statement which is culled out of balance sheet and out of P&L. It is a sort of a summary of both these statements. It is a linked statement. Now, it actually reveals whether there is enough cash or cash equivalents available to repay your loan. So it's a very important tool of cross-verifying the liquidity of the company. Similarly, it also reveals the capacity of company to meet its operational expenses, whether to run or pay salaries or pay taxes. You have to borrow unsecured loan from promoter. If you are in that condition, that means your cash flow is totally messed up. Friends, these days in Europe, it is not the security which is important when you sanction a loan. It is the cash flow. If your cash flow is good and if you have business model which throws in a proper cash flow, you can give a loan. If somebody comes to you with a 5 crore collateral and a 1 crore loan request, and another fellow come to you without a collateral and 1 crore loan again, if his cash flows are intact, go for the person without security, because You cannot sell 5 crore security easily to close your loan. You can only harass him for ages, give some money to advocates, go to DR2, go to NCLT, but you cannot recover your money easily. But if the cash flow of the borrower is good, this is the statement which will tell you, then you can take the risk and be a winner banker. Similarly, friends, the cash flow helps lenders determine successful implementation of business plan of converting cash back to cash through an efficient and profitable working capital cycle. Now, what is business actually? Business is converting cash, which we spend on machinery, stocks, and into receivables, stock in process, finished goods, and then again into cash. Now, that working capital cycle should result in some profit. Now, if cash flows are like this, which ultimately give you something to save also to expand business further after meeting all the expenses, then these cash flows are proper. Before we conclude, I will also, in a remaining few slides, tell you how you assimilate the cash flow. See, as I submitted, cash flow is an independent statement prepared on the basis of both balance sheet and P&L. So, chronologically, you have seen the audit report. It is acceptable. You open the balance sheet. You open the balance sheet. Now, you analyzed it. Ratios are in accordance with the bank's norms. You proceed further and see P&L. You have found out P&L is not cosmetic. It is not forged. It does not contain entries which are fictitious. Then you come to cash flow. And then, based on the actual movement of funds, you will really discern that the cash, loans, receipts, and payments, they are genuine entries, and they can really, carve out a good relationship in terms of getting your interest and installment back. As very academic that the cash flow has 3 portions: the operating, cash flow from operating activity, from financing activity, and from investing activity. Now, all these 3 are very, very crucial for analysis, but the best is that you must analyze very deeply the operating activity, whether the cash is getting converted into cash and with some handsome margin. This is how the operating activity should reveal. If it is throwing a positive cash flow, then only you should go for the loan. Otherwise, say a polite no and save yourself. Friends, the human capacity to rise in this world is very, very high. I just correlate to you with the mountaineering spirit of the great Edmund Hillary. Edmund Hillary was the first person who put his foot on the Mount Everest. Now, this Mount Everest was a big challenge. No other human being before him had ever even thought of scaling that. His sister at Christchurch Bank in New Zealand borrowed 6,500 New Zealand dollars and gave as birthday gift to Edmund Hillary and told, Bhaiya, you go to Nepal and try to scale Mount Everest because you have already done Alps and couple of long mountains in Brazil. He came here. He made friends with Sherpa Tenzing Norgay. And about 30 days before the assault, he started practicing, throwing axes, ropes, pickaxes, ladders, going up, coming down, adjusting to the oxygen levels, adjusting to the wind, storms, and the coolness of those mountains. One day, he fell down about 35 feet and broke his back very badly. And then, he tried to take some injections, medicines, some massage. Somehow his body gave in. And through satellite phone, he contacted his sister and said, I'm abandoning the project, I'm coming back. Sister was very, very positive on the strengths of her brother and said, no, brother, be there, take some rest, take more medicine. And then you try once just for my sake. This gentleman immediately agreed. And, while recuperating, he was sitting near the window when he just peeped out and saw the beautiful, majestic Mount Everest shining below the shining moon. It was a wonderful picture which he saw, and suddenly the tears started flowing through his eyes, and he wept and suddenly ran to his bedroom, put his head in the bed and said, "Oh, I wanted to scale this height and be the first human being, but suddenly my body has given way. I don't know how to scale this mountain." He brooded for about 5 minutes. Then the internal energy got accumulated. He came out of his door, wintry, chilly winter. He came out and saw towards Mount Everest and shouted, "Hey, Mount Everest, your height is only 29,029 feet. I am a human being. My height is only 6 feet. But since I am a human being, I can increase my height to many more thousand feet if I want. And then I am coming." And that day he decided to increase his height internally, and he was within 15 days. He was the first person to put his foot on Mount Everest. Friends, all of you are also Edmund Hillary's of banking industry. You have done wonderfully well as warriors during this corona. I know you will spend your valuable time, spend few valuable minutes in decoding balance sheet and related activities around this, and give us the best assets so that the Indian banking industry becomes the best, and all of you become the winner bankers of the future. Thank you very much.
Yeah, thank you very much, sir. You have covered the entire gamut of financial statements within a period of 1 hour, which we used to cover within a span of 2 days workshop. So entire discussion was based upon practical experiences and practical examples also. So that is the beauty when we listen to the chief top executives about anything. Rather than giving theoretical examples, they give practical examples. Thank you very much. Thanks a lot, sir. Any questions?
Sir, I am Sriram. Sir, I am Sriram from Trivandrum, Kerala.
Yeah, thank you.
Sir, this is a very good idea, sir, conducting this webinar on a Sunday, that to 11 a.m. And in normal working days, we may not get time to attend such a wonderful presentation, sir. He has breaked into pieces the balance sheet. He has breaked into pieces with suitable examples, and he has narrated, sir. I am a CM credit in AO Trivandrum, and it was very, very useful, sir.
Yeah.
It was very, very useful.
Thank you, sir.
Yes, sir. Yes, sir. And in future,
yeah,
sir, in future, I request kindly arrange this webinar, preferably on a holiday or Sunday, sir. That will be very, very useful, sir.
Every Sunday we conduct webinar and we call different dignitaries to deliberate upon, and
Yes,
we
sir.
send the link to our registered participants. If you are not registered, if anybody is not registered to Banking First, please put your name, email address, and mobile number in the chat box. We will put in
Yes,
our
sir.
list. You will keep on receiving our upcoming events.
Yes, sir. Sure, sir. Sure,
Further,
sir.
friends, you please keep on checking our website, bankingfirst.com, where you will come to know which are the events coming up. Please check our website also.
Acha, dear Tilakji,
Yeah, Mr. Prakash. Yeah.
we are really grateful to
Yeah.
you as well as Mr. Hargovind ji. It is really nice to hear these things, and he has given practical hints, and they will be really useful in our day-to-day life. Not even for the youngsters, but for the senior position people like us also. It is really very, very marvelous, and you are doing this like a teach one everyone. Like this, very nicely articulated by Mr. Hargovind ji, and the Banking Quest is really doing a very, very appreciable service to all the bankers. My all appreciation to you, and thanks to you all.
Thank you.
And thank you, Mr. Hargovind ji, also.
Thank you, Mr. Prakash. Thanks a lot. Yeah, friends. I think everybody is in the chat box. I'm finding that everybody is appreciating the webinar. Everyone is appreciating the webinar. So thank you, I think. So we have got Mr. Vaman Gokhale. Vaman Gokhale is also our core team member and is the program director of our credit management program. So I request Mr. Gokhale to kindly say a few words. He's a former deputy general manager of Sachdev. So kindly, sir, Mr. Govind.
Yeah, thank you very much, Hargovind ji. We are extremely, I will say, because of your the presentation, definitely the participants will develop an insight into the balance sheet, the profit and loss statement that is called as an operating statement, the cash flow analysis, and of course the audit report. And you have very nicely, I will say, correlated all the statements along with the auditor's reports. So whenever analysis has to be done, it should be by a combined analysis. I will say that is, we should have a broader outlook combining all these statements. And you have very lucidly, I will say, gone into the details analysis, the dissection of various items of balance sheet operating statement. Thank you very much.
Yeah, thank you, Mr. Kukle, sir. Sir, Mr. Hargovind, sir, presently we are conducting a credit management training program. And this program is entirely being conducted by Mr. Vaman Gokhale. And this program, we are having 15 sessions, sir, for 1 hour, 15 hours of session, and this training program. And I appreciate that you have summed up the entire credit management training program in 1 hour. Thank you very much. Yeah, friends, if anyone else want to request Mr. Hargovind Sachdev to kindly say a few words more. So I request if anyone else want to say anything, kindly unmute and say.
Sir, Jaideep Sharma from State Bank of India, sir.
Yeah, Jaideep Sharma ji, yeah, welcome, sir.
Sir, excellent presentation by Hargovind sir, and it has been after a very long time I am listening to him, and he has presented it in 1 hour. What in the banking system and training system we used to cover in 7 days, 7 or 8 days, sir. In 1 hour he has covered almost all the points, sir. Thank you very much.
Sir, I'm A.K. Purbe. I'm from Indian Bank.
Yeah, Purbe, yeah.
So actually this class was totally delighted me. I'm totally surprised. We have seen so many balance sheet, but how to see the balance sheet in proper way today I came to know one, sir. Thank you very much.
Yeah, sure. So friends, I think a lot of appreciations are there. But honoring the time, I request Mr. Hargovind Sachdev to say final words to all the participants. Then we will close these sessions.
I will only say, na sangharsh, na taklif. ना संघर्ष ना तकलीफ तो क्या मजा है जीने में। बड़े बड़े तूफान भी थम जाते हैं अगर आग लगी हो सीने में। अपने सीने में आग लगा दो कि मैं अच्छा बैंकर बनना है, एनालिसिस अच्छा करना है और अच्छे एसेट्स क्रिएट करने हैं, तो आपसे कामयाबी दूर नहीं।
So nice. Thank you very much. It's such a moralizing word. Yeah, you are saying. So thank you very much, sir. Thanks all the participants. Thanks a lot. I'm closing this session.